Hey everybody, hey and welcome to Flip the Switch. Wednesdays, Flip the Switch. I'm gonna just give a few minutes and allow some other people to join into the live. For those that are already tuned in, thank you for joining us. We are happy that you guys are here. See what you over there eating on. D, can you hear me?
Hey,
What you over there eating on?
some rice. There's one, some rice.
Hmm. Let me make sure this music not too loud on YouTube. Hold on.
We'll be eating chicken fried rice and this mango lemonade.
That sound good. Why is it not coming up? Am I tripping? Let me see if I can cast it to the TV. Why is my YouTube acting funny with me? Welcome to whoever's tuning in. I see you. I see it. It tells me how many people are watching. Let me see. What? Are you able to see the live?
No, I never do see the live when I'm on.
It's not letting me, but I'm on my phone. I'm trying to get in on my phone. It's not letting me on the live. That's weird. I don't even know where my remote control is for my TV. I don't even know what I did with my remote. Here you go. I'm trying to put it on my TV, see if it come up on my TV. Welcome. Thank you for tuning in. We're about to get started. I'm just bringing it up on my TV. I just want to see. Because on my end, it just sound loud. But I know that last time you was like it wasn't loud. It wasn't that loud. There you go. Let me mute. Hold on. It's a little delay, but it's not bad. It's a little delay, but damn, what was that? Like a 20-second delay?
About 20 seconds.
Oh my gosh. All right. Well, we have some more people that joined in, so we're gonna go ahead and get started, you guys. Again, welcome to Wednesday nights Flip the Switch. Today we are talking about turning your portfolio into a paycheck, y'all. And when I tell you I had this conversation with a friend of mine, and I had this conversation with D earlier today, I was like, I'm finna do this. But we are going to break down how to use weekly and monthly dividend paying stocks and ETFs to create consistent income. And we're going to talk about how to supercharge that income through the power of compounding. It's not just about investing, but it's really about flipping your financial script. And we all want to do that, y'all. We all trying to make some residual income. I think we're all to the point where we're like, we're ready to work for ourselves. I don't know about y'all, but I know I am. What about you, D?
Listen, it's the best place to be.
The best place to be, okay? Working for yourself. Seriously, okay? So we're just gonna go ahead and jump into it, you guys. In the first part of this podcast, we are gonna talk about why dividends are the real MVP, okay? And we are going to talk about what are some dividend paying stocks and ETFs, okay? Like not some, but what are they per se? Let me clear that up. What are dividend paying stocks and ETFs? So we'll start with the dividend paying stocks. The definition of a dividend paying stock are shares of companies that regularly distribute a portion of their profits to shareholders in the form of dividends. And some typical sectors that they have are usually utilities, consumer staples, financials, and healthcare. Often they often feature the dividend paying companies. Okay. Some examples of some dividend paying stocks are Johnson and Johnson, Coca-Cola, and Procter and Gamble. They are known for consistent dividends, okay? And the benefits of having these is dun, 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 passive income, okay? And it's ideal for retirees or income focused investors. Then there's stability, because these are often less volatile than growth stocks. And then there's the reinvestment potential. Dividends can be reinvested to buy more shares, compounding returns. All right. Now, what is a dividend paying ETF? It is, well, the definition is exchange traded funds. That's what ETF stands for. That invest in a basket of dividend paying stocks, and they offer diversification and convenience. Okay. So types are high yield dividend ETFs, which focus on stocks with above average yields. And then there's the dividend growth ETFs, and they invest in companies with a history of increasing dividends. So there are two types of ETFs, okay? Popular ones, of course, are the Vanguard High Dividend Yield ETF. That one, the ticker symbol is the ticker symbol is VYM. Then we have Schwab US Dividend Equity, and that one is SCHD, which I love, I love, I love. Y'all put a big fat check mark next to that. And then we have the SPDR and the S&P Dividend ETF, and that ticker symbol is SDY. Some of the advantages of having ETFs is, of course, the diversification. It reduces risk by spreading investments across many companies. The lower costs, they often have lower fees than mutual funds, and automatic income, where the dividends are paid out regularly and often quarterly. But that's not too true when it comes to ETFs. Okay. Um, the difference between weekly, monthly, and quarterly payouts when it comes to the stocks and the ETFs is Number one, with weekly payouts, is rare, right? It is extremely uncommon, but you definitely get a lot that do have the weekly payouts. Most companies and ETFs do not pay dividends weekly, but again, there are a nice large chunk of some that do. Okay. Who does it? Some specialized funds or high yield investment platforms may offer weekly distributions, but they often offer, or they come with riskier and a structured difference. Okay. But the pros for the weekly dividend payouts is the fact that you get frequent cash flow, which we love. I ain't gonna lie, in our group, I post about getting my weekly dividends every week. Like, hey, listen, just came in every Tuesday like clockwork. Okay. So that's definitely a pro. And then another pro is it can be useful for short-term goals when it comes to income needs. um some cons that come with weekly payouts is it may signal higher risk or less stability, and then often comes with higher fees or complexity. All right. Um, then we have the monthly payouts. This is common. Certain ETF REITs, which are the real estate income trust and income focused funds, they pay out monthly. Some examples are the Global X Super Dividend ETF. That ticker symbol is SDIV. Dang, D, it's real up close on your face now. What you trying to do? We don't want to see your
I ain't doing anything. I just took it off and then brought it back on. And it's
having to
right
look
here.
screen and see your big old face. Okay, then we have another good monthly one, which is Realty Income Corp. That ticker symbol is O. And this one is dubbed the monthly dividend company. Put another big fat check mark next to this one, Realty Income Corp. That is one of my favorite monthly paying ones. Okay. The pros with having a monthly paying stock or ETF is you get that regular income stream, and it's great for budgeting. And it's easier to reinvest your dividends every month. Okay, so that's a plus when it comes to monthly. And then a con is, of course, there are slightly lower yields compared to the quarterly payers in some cases. Okay. Then of course the most common one, and the one that people are familiar with, are the quarterly payouts. It's used by the majority of dividend paying stocks and ETF. There's a regular schedule, so typically paid in March, June, September, and December. The pros with having quarterly payouts is that it's standardized and it's predictable. Predictable. Hold on. Excuse me.
Bless
Um, Thank you. And then it's often associated with financially stable companies. And then the cons is, and it's only one, is less frequent cash flow compared to, of course, the monthly and the weekly options. Um, some might ask which one is better, and I'm gonna ask you, D, but my answer is it really depends on your goal, whether you want steady income, long-term growth, or if you want to just go with some aggressive income strategies to build up your funds. What about you? Like, which one for you would you say is better for you and what you want to do, D?
But to be honest with you, if you think about it, all of it is good because regardless, you still get some. Even the ones weekly, you coming through weekly, and then when the ones monthly, okay, that's coming the ones quarterly, and then even the ones yearly, annually. So basically, I like to dip and dab in all of them, because that means consistency, with income coming in. So, but you can do weekly, that's good too. But don't just limit yourself. Don't just put all your eggs in one basket. So that's my answer.
So you would just say have a diverse portfolio.
Yes, have a diverse. Like I have a diverse one. Yes.
Yes, yes, I do too. I do too. I have some weekly, some monthly, and some quarterly ones. I'm not gonna lie though, I definitely go hard on those weekly ones because I like to see that money coming in every week. And
And
of
they come
course, I
in. They
reinvest. So you
come,
know, what'd you say?
no, I said, and it do come in. They give you an alert, so it comes in. I'm like, okay.
I like when I see that little feather pop up at the top of my phone. Robinhood, let me know I got some dividends, baby. Okay. So just moving on, monthly and weekly dividends are ideal for building cash flow now because they provide frequent, predictable income that aligns with real life expenses, and it accelerates your reinvestment opportunities, which is of course what we just said, right? So here's why they're especially powerful for immediate financial impact, not just long-term growth. You get that frequent income, so you get that real-time budget support. Monthly dividends, they match common expense cycles like rent, groceries, utilities, and then making them easier to integrate into your budget. Weekly dividends, though they are rare, often even faster liquidity, right? Helpful for freelancers, gig workers, or anyone with a variable income. This regularity reduces reliance on savings and credit between quarterly payouts, which is good, for those people that have a lower income, right? When you get your dividend income, that can kind of just help in between, so you don't have to, which I mentioned on one of my previous videos or one of my previous posts on social media. You want to get away from getting yourself in debt, right? Putting yourself in debt by going to some of these buy now, pay later companies to be able to, pay some bills or get some extra groceries or things that you need in the between time of when you're getting paid. So, definitely having those monthly or those weekly dividend payouts, they come into good handy. Okay. Number two, you get a faster reinvestment equals compounding gains. More frequent payouts mean you can reinvest your dividends sooner, buy more shares, and compounding returns faster. Monthly investments can lead to a higher total return over time compared to quarterly schedules. Number three, there's that psychological and emotional benefit. Seeing income regularly can boost confidence, okay? Because having money on deck, right? Not having to ask somebody if you can borrow $1.15, okay? It's gonna boost that confidence and motivation, especially for new investors or those transitioning to financial independence, and it creates a sense of progress and control, which is key for sticking to long-term plans. Um, and then number four, ideal for early retirement or fire strategies, which I do know a lot of investors do tend to move towards the fire strategy. You get monthly and weekly dividend ETFs are increasingly used by those pursuing that financial independence or retiring early, right? They allow for partial retirement or income supplementation without waiting for traditional retirement age. So it's good for those that want to retire early but not at that retirement age, because hey, I'm 42, I'm ready to retire. I'm nowhere near retirement age. Okay, they just upped it to what, 67 now, the retirement age. So um, yeah. Um, Number five, strategic portfolio planning. You can build a dividend calendar by combining monthly and quarterly payers to ensure cash flow every week or every month, which we'll talk about it in another video on another podcast. But you definitely, you can do that. That guarantees either daily, weekly, or well, of course, you're going to get that monthly. But if you set it up right, depending on when the payouts are for these different ETFs and these different stocks, you can have yourself being paid every day. Okay. If you set it up right. So you definitely want to be strategic with that, which I think we've done before in our group, and I'll put the link for our group too so you guys can join. But we have a plan to where, and we have different ETFs and stocks, and we have the dates that they actually pay out so they can align with how you get paid, and again essentially equaling to you getting paid every day, right? um
Can I ask a question? I might be going too far,
mhm.
but I know we've been in 20 minutes. I don't want to forget this. So this is some great information that you have been sharing. A lot of people feel like, well, they don't have enough money, to invest in none of this. But are you gonna go over that you really can start off with $5? You don't have to.
To
You
that,
can start off, yeah. You don't need a lot of. You can literally start off really small and build your way up. You can literally start off with $5, six
mhm.
dollars, $10. You can put in there $5 a week. To build it up. I'm telling you, but I just want to let you know. If you thinking I'm not in the money bracket, I cannot, afford none of this. Yes, you can. Okay, you
And,
can afford. So
hey,
somebody,
yep, go ahead and read it. You can read it, D.
I know I can barely see you. I need some glasses. What did it say?
It's okay. It says, "Hi D, is this available internationally?" Absolutely. You can be almost anywhere in the world. I think I know where you are, Sasha. You can. It is available for you to invest. And I think you're in the group. If not, I can add you to the group. But it is I think it is available where you are, and I can give you two apps. I know for sure Robinhood should be available where you are. If not, there are two other ones that I know you could possibly use with where you are, where you can purchase the stocks and ETFs and you can invest as well. So yes, it's definitely available internationally. Yes, ma'am. Yes, ma'am.
Let me tell you, you want to start off somewhere. Like I said, even if you're putting $5 in there a week, start because before you know it, your portfolio gonna grow and grow and grow. You're like, okay. So yeah, so come on.
That is absolutely, and I will, Sasha. I will definitely add you to the group, so that you can get in there and you can get started. So remind me to. Well, you don't have to remind me. I'm gonna remember to do it as soon as we are off of the podcast. And thank you for tuning in, Sasha. All right. And then the last part of being strategic is just letting us know and reminding us that this strategy, when it comes to combining all of your different cash flows, is used by ultra wealthy investors and family offices to maintain consistent liquidity. Okay. So a lot of the rich people, that's how the rich stay rich. Ain't that how they say it? That's how the rich stay rich. Ah! That's how the rich stay rich. Okay. But we're gonna go ahead and move to the second segment, because y'all know we try to keep these podcasts a little on time and not have us on here for too long. How long we been in? 23 minutes. That's not bad. Okay. Last one was 45 minutes. Let's see if we can beat that, you guys. Okay, so moving on, next we're going to talk about the compound hustle. This segment is what I'm going to call the compound hustle, and we're going to talk about how reinvesting dividends can accelerate your wealth. Okay. It can accelerate your wealth by harnessing the power of compounding. Each dividend payment buys more shares, which then generates more dividends, and then creating a snowball effect over time. So the more you put into your stock or your ETF, the more you're going to be able to earn dividends with it. And I call it drip effect, which we are going to get into. But I call it the drip effect, where you just keep reinvesting until you get to that monthly, that weekly, or that monthly or that quarterly income that you definitely want to receive, right? Um, so here's how it works, and this is why it's so powerful, okay? Um, Instead of taking dividends as cash, which is what I just said, you can use them to buy more shares of the same stock or ETF. This can be done manually or automatically through the dividend reinvestment plan, which is DRIP. offered by brokers a company, and it is definitely coming with Robinhood, which is my main one that I use, but I also have another portfolio as well with another app. The power of compounding. Compounding means you reinvest earning returns, not just on the original amount, but also on the reinvested dividends. Over time, this leads to exponential growth, and your portfolio grows faster because each new share earns its own dividends. Okay. A real life example. Let's imagine you have 100 shares of a stock that pays 100, not 100, that pays $1 per share annually. If you take $100 in cash, your investment stays the same. If you reinvest, you buy more shares, say two more at $50 each. Next year, you earn dividends on 102 shares, not just 100 shares. This cycle continues and it accelerates your returns without adding new money. Okay. It's compounding. And y'all that's been with me, since those hype days, y'all already know how compounding works. Okay. We compound, we make these coinage. Okay. We compound in what? Make coinage. Say it. Somebody say coinage. Okay, ain't nobody gonna say coinage. I see all these people watching it on here. Ain't nobody saying coinage.
They go say it, they go type it in the chat.
Oh my God. Anyway, okay. So benefits of reinvesting dividends boost long-term returns. Even modest dividend yields can lead to significant growth when reinvested. It's cost effective. Many drips offer no commissions on reinvested shares, and that's true. I do not pay commissions on my shares or my reinvestments on Robinhood. Automatic wealth building. Once it's set up, it runs in the background, growing your portfolio passively. So you never even have to go in there to add anything additional unless you just want to. Okay. Some things you do, however, want to consider, depending on where you are definitely taxes, right? Reinvested dividends are still taxable in most cases, even if you don't actually receive the cash or withdraw it from your brokerage account. Okay. Diversification. Reinvesting in the same asset may increase exposure to one company or sector. So you definitely want to consider reinvesting also into other stocks, other companies. Okay. Market timing. Reinvestment happens regardless of price, which can be good or bad depending on the market conditions. Okay. We all know when it comes to the stock market, the rates and the prices, they go up and they go down. Okay. A pro tip that I can give you guys is use dividend reinvestment in tax advantaged accounts like IRAs or Roth IRAs to avoid immediate tax hits and maximize your compounding. That's definitely optional. Okay. I do have an IRA. And I do diversify when it comes to my IRA as well. I love the way that thing look. Every time
And before I hate to interrupt you, but we are not tax advisors. We are not
oh,
financial advisors.
you're
We
not.
just give our opinion, something we do, but we are not professionals.
This is just our opinions and our experiences, okay? Yes, we are not tax advisors. I can't tell you what to do with your money. I can't tell you the same thing that I do with my account is going to work for your account, okay? So yes, that's that on that. I'm just going to skip over this. I had a visual, but we don't necessarily have to do that. Just the takeaway I had from this segment is even modest monthly contributions can snowball into significant wealth if reinvested consistently. So definitely stay consistent with it. Now, things do happen. I'm going to be very transparent and honest with you guys. Things happen, and there might be a time you need that money and you need to pull it out, and you want to pull it out. Pull it out if you need it. I'm looking at my shirt. Pull it out if you need it. I have done that. I have drained my brokerage. I actually just started over with one of my brokerage accounts. I needed the money. I had a couple of $1,000 in there. I needed it. I took it out. I did what I had to do. And so I'm rebuilding that portfolio back up. So don't just let that money sit there. If you have a need, that's the purpose of you doing it. Look at it as a savings account as well. Even though you want to build up your income, you want to get to a certain level, look at it as also that backup and that savings account. Like I mentioned before, that in between when you're waiting on the next paycheck and you need to cover something, that money is available for you. Do not be afraid to take it out when you need to. You can always stack it back up, okay? And trust me, again, I've done that, okay? I'm starting back over with one of my portfolios. So it happens, okay? The snowball effect. The snowball effect in investing is when your money starts making more money automatically through compounding and reinvestments. It's the engine behind long-term wealth creation, okay? Here's why it works and why it is so powerful, okay? Imagine rolling a small snowball down a hill. I wish I had a visual. I think I'm gonna start making some PowerPoint presentations. As it rolls, it picks up more snow and grows larger, faster and faster. In investing, this happens when your returns generate more returns. Dividends, interest, and capital gains are reinvested, creating a cycle of growth. How it works in practice: you invest $100, it returns, it earns a return, let's say of $8. You reinvest the $8, so next time you earn returns on $108. You're gonna repeat this monthly or quarterly or weekly, however much you can afford to reinvest and however often you can, and your investment will grow. Okay, your investment will definitely grow. All right, the real impact over time is you earn returns on your initial investment. You're earning returns on investment plus all the reinvested dividends. And now let me tell you, let me back it up. Year 1, you earn returns on your initial investment. By year 5, you're earning returns on your investment plus all the reinvested dividends. And then by year 20, your portfolio may grow worth 2 to 3 times more if you had taken the dividends as cash. Okay. What is autopilot wealth, you guys? Once set up via a drip or automatic reinvestment, you don't have to do anything. Your portfolio grows while you sleep, work, or travel, and is the ultimate passive income strategy. Okay. The earlier you start, the more powerful the snowball becomes. Time is the key ingredient, more than the amount you invest. Okay. Anything before we move to I think it's our last segment, D?
No, I think this is good. We ain't get timing, but I love the snowball example. That is so true.
Yep. Snowball is just reinvesting. All right, you guys. So our last segment, I think, y'all don't judge me if we got another one after this, okay? I don't think we do. A few of the popular weekly and monthly ETFs to research. You guys get a pen and paper and write these down. And of course, if you join the group, you guys will see some of these as well. But you want to remember Jeffy, that one is monthly paying, JEPI. QYLD is monthly. O, which is that old realty told you guys to put a check mark next to, that's monthly. We got PSEC, that is monthly. And we have EPR, that's monthly. Now, for 3 of the weekly ones that I'm really loving right now is MSTW, PLTW, and COIW. Okay, so y'all definitely look into those. Those are my 3 weekly ones that I am loving, and we get paid every Tuesday with those. Okay. How you can evaluate dividend yield versus sustainability. To evaluate these, you want to look beyond the percentage payout and assess whether the company can consistently afford it. Use metrics like payout ratio, cash flow, earning stability, and dividend history. If you're not used to looking into these, get used to looking into these. This is something that we also keep you updated on in the group. However, because we do know that there is a large community of people that want to invest, that want to earn, but they don't know what to look at, and that's fine. I was there when I first got started, but I started getting used to looking at a lot of these things and paying attention to know which ones I wanted to invest into. Okay. Just understand when it comes to high yield, it's not always safe. Okay. It can be volatile. All right. So this is how you want to break it down. You want to understand the dividend yield, and the formula is dividend yield equals the annual dividend divided by the share price. Okay. And then high yield can signal strong income potential, but also it can be a red flag if it is unsustainable. Low to moderate yield from stable companies may be a more reliable long-term investment that you want to look at until you get familiar with the stock market and looking at the different stocks and doing your research. Okay. Or if you just want to go based off what I tell you, but again, we're not financial advisors. Okay. uh You want to check the payout ratio. Okay. That formula is payout ratio equals dividends divided by net income. A healthy payout ratio is typically below 60% for most sectors. Ratios above 80 to 90% may indicate the company is stretching to pay dividends, and it could risk future cuts. Okay. You want to analyze free cash flow. Dividends are paid from cash, not just earnings. So you want to look for companies with positive and growing free cash flow. This shows they can afford the dividends without borrowing, okay, to pay you on your dividends. And then you also want to review dividend history. Companies with long track records of stable or growing dividends are more likely to maintain payouts. We definitely pay attention to those when it comes to our monthly and our quarterly stocks and ETFs that we invest into. Okay. And then also just remember, sudden increases in yield due to failing stock prices may signal trouble, and that is a potential dividend track. So you want to pay attention to that. When you start to notice that, you probably want to go ahead and sell your shares. Okay. Again, that's not financial advice. Consider business fundamentals, evaluate the company's debt levels, profit margins, and industry stability. You definitely want to pay attention to that. Red flags to watch out for are the sky high yields. Okay, that's going to be your 10% or higher without strong financials. Pay attention to negative earnings or declining cash flow. And then also pay attention to recent dividend cuts or erratic payout patterns. So if you notice that a company is not being consistent with their payouts, where they usually pay weekly, they've missed a week or two, and then they come back with another dividend payment. You want to make sure you pay attention to that. That's including the monthly and the quarterly ones as well. Okay. Your checklist that you want to pay attention to when it comes to sustainability is you want to pay attention to the payout ratio. If it's less than 60%, that's a good check. Okay. Positive free cash flow, again, check. Stable or growing earnings, check. Long dividend history, check. Definitely pay attention to the dividend history, okay? And then low debt to equity ratio. Definitely pay attention to that. Evaluating the yield versus sustainability helps you avoid risky dividend traps, and it builds your portfolio that pays consistently. All right. Tools to use. These are apps that you guys want to think about having. One of them I definitely have. So the top dividend tracking tools include ShareSite, Snowball, Analytics, the dividend tracker. I definitely have the dividend tracker. I have the app on my phone, and then Simply Safe Dividends. They each offer features like income forecasting, reinvestment tracking, and tax reporting. Okay. I'm not going to go into the breakdown of each one. Again, I have the dividend tracker. I think that's the best one. I love it. It's simple to use, and it's simple to, just to understand. I'll just put it that way. Okay. So boom. I think that's it, y'all. And then finally, just to flip the script strategy, you want to turn your dividend income into something bigger, okay? So once you start earning that income that you want to earn from your dividends, and you're bringing in your goal that you want to bring in every week, every month, every quarter, invest in something else. American Bill money. Okay, invest into something else. Invest into your business that you already have. Invest into traveling. Invest into doing something that you want to do with your life. Invest in you. Okay, and then on your friends and family, show them how you can do the same thing. Financial literacy meets duplication, okay? When everybody gets this and they learn this and they learn what to look out for and they learn how to build their income, that is stability, and that is what we all want. So here we are, y'all. My call to action for you guys. I want to challenge you, first of all, to join our group chat, and I want you to start a dividend hustle portfolio. I want you, if you can, to invest $25 a week into a dividend paying ETF or stock of your choice, whether it's weekly, monthly, or quarterly. I want to challenge you to invest into one of those. If you can do $25 a week, if you cannot do $25 a week and you can only do $2 to $5 a week, do it. Okay, do as much as you can afford to do into one of those stocks or ETFs, and let's see how you can build with that. Okay. And then for those that are tuning in after the live, I want you to comment and tell me your favorite dividend plays in the comments, okay? And then I think next week we're probably going to talk about a strategy and how we can build a $500 a month dividend stream in just 12 months. I think I want to look into that. What do you think, Dee? What do you think about putting together a $500 a month plan?
I like that. That right there is absolutely amazing. This right here has been very, very knowledgeable, and I'm excited about this topic. I love this. So this right here is going to be a great, great topic. But yeah, let's get together and let's do that. That's going to be amazing. If
That's gonna be
everybody,
the video for next week. Yeah, I think we're gonna do that. Put that plan together. Let's start that strategy. For those that are interested in joining the group, just let me know. I can give you the link to get in. Sasha, I'm gonna make sure I add you, and I'm gonna go ahead and post our challenge in our group chat. It is gonna be called the Dividend Hustle. Okay, and that's where we want to put in up to 20. I'm gonna say up to $25 a week into a stock or ETF that pays out dividends, and we're gonna snowball that thing and see what happens. You guys, I want to thank you as always for tuning in. This was a great, great live. We shared some good information. I hope you guys were able to take notes and you got something from this. And as always, like I always tell you guys before I go, flip the switch. Okay, change your financial life, change how
yeah,
you're living, and live the way that you want to live. Do not let anything stop you. Okay.
Yes, you have the power.
Yes. And thank you so much, D, for tuning in. And you guys, we will see you next Wednesday. Flip the
Bye.
switch. Bye.